Hey traders, welcome to Charts and Coffee. Hope everyone having a good Friday morning. We're wrapping up the week here, one where we've gotten through some kind of less dovish talk from FOMC member Bowman. We've gotten what ends up really being kind of a meh event from NVIDIA. So in terms of any major movement in NVIDIA, really didn't leave the range that it's been operating in. So not much drama unfolding there. We continue to see the sectors that have been strong, things like financials, regional banks, the Russell, things like metals and mining, even insurance. Some of these continue to move higher. A lot of the financial sectors collectively have been benefiting. And then you've got the metals and mining, which has been quite strong quarter to date. We've been emphasizing quarter to date because the quarter to date is likely going to be where the window dressing, right, that bullish tendency. And remember, there's this window dressing tendency going into the last month of the year, even the last 4 to 6 weeks. And then there's a Santa rally. They're not all the same thing. In fact, Santa rally is kind of now sort of used as the verbiage for end of year rallies, when Santa rally is a very specific 6-7 day window from about just before Christmas or Christmas to New Year's. What I'm talking about is a phenomenon that starts far earlier and actually is a far better window to trade. So yes, there is very often a bullish tendency into the end of the year, but we have to be selectively bullish. And if those of you that caught a video that I did about a week or so ago, I had a video at the Simpler Trading YouTube channel called Selectively Bullish, because it's not as if the tide's rising on everything. It's not as if healthcare is benefiting or home builders. Not everything is moving higher. We have to be aware of what has been strong, will continue to very likely be strong, and the look back for what has been strong is about the last quarter. You can even look at month to date or the last month. I tend to like that quarter. All right, so basically, ultimately, what we're looking at is strength in consumer discretionary and communications, not so much semiconductors, not so much technology, strength in regional banks, big banks, insurance, metals and mining. And if you haven't already taken a look at the quarter to date relative performance, you'll see there's also a couple other sectors up there that we're starting to watch a little bit more closely. And those are the ones related to oil and gas companies. Natty gas is in an uptrend. So natural gas is already moving higher as far as the commodity goes. And crude oil is still kind of stuck. Doesn't mean that stocks within it are not moving. In fact, I would definitely put Chevron. If you haven't put Chevron on the list of things to watch, please do. We are starting to see some strength in this part of the, if you look at the market, which is really kind of a nonsensical term. What is the market? We have currencies, treasuries, energies, metals, right? So a lot of times people just mean the S&P 500. But what we want to do when we're being selectively bullish, when we're accurately building a watch list, is think about the overall approach to what we want to trade as, are they the relative outperformers? Do they have trends? Can we expect a continuation of the trend? Not something that's been moving lower that suddenly we hope is going to move higher, but rather what is already moving higher that will likely benefit from window dressing and continue to move that way. All right. So as always, gang, if you have any questions, feel free to type them in. All right. I was just talking with, I was typing, right? It's funny how typing and talking have kind of become the same thing, right? Whether we're texting or slacking or whatever. But I was just talking with the bot. Many of you know the Lorna bot for the Sector Secrets Mastery Room. And we were talking about Bitcoin. I'm not talking about buying Bitcoin up here. It's funny how when something is at all-time highs, even though the narrative was pretty much similar a month ago, everyone gets really into the symbol. However, it's kind of trading well. In fact, I'm going to pull up the symbol that the Lorna bot's been trading, and this is the micro Bitcoin. You'll notice that because it's micro, for those of you that are already familiar with trading futures, when you trade a full-size contract, the dollar value per point and the initial margin requirement is far higher. When you trade a mini, it's less. And we trade a micro, it's basically the smallest. By the time you get to a micro, most often it's going to be 1/10 the size of the larger. And ultimately, when you look at something like a micro Bitcoin, what is this going to do? It's going to give you the ability to trade something with lower initial margin requirement and lower dollar amount per point, which you might say, well, I want the big dollar amount per point right up until the trade goes against you. But yeah, the bot was mentioning that this has been a pretty interesting one to watch. And if you have been wanting to trade Bitcoin, for crying out loud, please don't consider new highs the opportunity to buy. Even a small pullback intraday is better than buying at a new high. There's been so many pullbacks throughout this move higher. Just remember what typical retail traders do. There's never a higher high that they could not resist. Right? That's what they do. By the way, institutions, brokerages, hedge fund, everyone relies on basically the very predictable behavior around retail trading, which is, oh my gosh, it's moving higher. Let's get some. They know this, right? They know this. So don't be on the side of that very common reaction to, oh my gosh, Bitcoin's made a new high. Let's buy it, as opposed to, oh, let's start watching it because it's in an uptrend. Let's buy the dip, right? When everyone got freaked out because Warren Buffett refused to buy the equity markets after numerous all-time highs, everyone thought that was such a bearish sign. Everyone meaning retail trading, and of course, financial media fed that nonsense because that's what they do. They feed nonsense. It keeps people tuned in. But what we should think about that really is Warren Buffett doesn't want to buy a new high, right? Let's learn from Grandpa Buffett. There's a lot of wisdom there. All right. So yeah, bot's been scalping that and day trading that big micro Bitcoin, which is kind of cool. All right. So let's see what we've got here. Got some questions and Google. All right. So first up is Google. Now remember, Google, let's parse between two things. And I love the question about Google, Bob. Let me read your whole question and let's open this up. Question is, Google just can't seem to get a break from DIJ action. Yesterday was another whammy. Where do you see short-term bottom? Nobody knows, Bob, please. Nobody knows. If anyone answers that question for you, please know they're just guessing. What I can do is say there are levels of previous support and resistance that we can watch, right? And I would say it's probably going to be generally, and I'm using my automated Darvis, it's generally going to be in that area, right? It's to stay above that green zone would be pretty powerful. But if we don't stay above that level, here's the next area. Basically from that 200, that's basically a 200 exponential, although it's not entirely that, but that's an easy way to somewhat replicate those white dots on my chart. That would be the next level down. And that's really where there's been previous action. Am I going to presume that's where it'll be next? No. Here's the other thing too. Ultimately, I wouldn't even trade this thing. Day trade it if you'd like, right? Day trade it if you'd like. Wait for another setup on a longer term time frame like a weekly. I'll give you an example. In the Sector Secrets Mastery, we're long from 152.5. So while this was a significant pullback, we're still in a profitable position. Why? Because we looked at a weekly and bought a dip. So I would look at the weekly chart. I would not trade Google with any kind of longer term expectation, Bob. We have to accept that there's a lot of uncertainty. So there's two ways that I would look at this. The timing of buying long calls has to be at the same timing that I would want to buy the underlying stock. And I'm not there quite yet. Maybe the first time I would even think about it would be that second green zone. So just again, in September, the first week of September, we bought an area around 150. So I would probably be willing to do that again. Yeah, I wouldn't have an issue with the area between about 154 to 147 and change. That's where I would think about doing it. So there's nothing that I'm comfortable buying today with proper timing, right? Meaning, yeah, someone could buy something today and it might lose value as whatever this narrative is unfolds. My thought is, if timing is trading, I'd rather get the timing right. But if you're looking at something that far out, yeah, you might be able to um, obviously withstand whatever comes next, or maybe the bulk of the bad news hit. That's the thing. Nobody knows. But those would be the two levels that I want to take a look at if I'm looking at the long side. And then you got to ask yourself also, you know, again, I can only talk from the perspective of the position that I have right now. I'm in from 152.5. So that probably gives you a pretty good idea of where I'm comfortable, right? Looking at the position from a point at which I expect to be able to make a decent upside, while my downside is pretty limited. Downside limited means I think I bought a pretty darn good support level that would hold. And that's what I'm lacking until about a buck 60 based on what we're seeing right now. All right. And again, maybe my Google analysis doesn't have as much, I'm not acutely trying to get in. It's not a pressing issue in terms of Google because I'm already in. So maybe that's some of my unwillingness to like this level as well. So, we always got to think of the bias that we're going to carry if we've already got a long position from far lower. Did I happen to pick up any Amazon yesterday? Jas, I did. Did the trend get out of whack? It did not. No, we're actually long Amazon as of yesterday. Panthers Are King says, is the gap on IBM too late to trade? I don't want to trade IBM at all, Panthers. Of all the things that I could trade, I would rather focus on things that are already strong. IBM just posted its first green candle, which is great. Maybe it puts it back on the radar for us. And that's where, if you're looking at a weekly chart, I think being able, for me, I think being able to flex to a weekly chart every now and then, that's a trend on the weekly. See, this is a 10-year look at IBM. So if I squeeze in all the data, I've got 10 years worth of data. But if you look at this weekly candle, where we pull back on earnings, hung out around this 21 exponential, which is really not an exponential anymore, but for those of you that are already familiar with propulsion dots, loosely mimics where they would be. I've got a Darvis level there at 203. That's a weekly setup. I don't make a big deal of gaps. I think they're not really that helpful aside from understanding support and resistance. And I think the clarity for the long position was steady on the weekly time frame. So if a daily time frame, daily slices of psychology are not giving us the clarity we need, look shorter. Maybe it's a day trading. Maybe it's a short-term swing. And if that's not where the clarity is, clarity typically meaning a trend, then the weekly, it didn't even flinch, right? So that's probably the time frame that we want to take a look at. All right, next up is, bear with me, let's see. So thank you for the question on IBM. Stephen asks, I was wondering if there's a software that I could use that reports in real time certain stocks that affects indices. A software. Stephen, how about, if I'm understanding your question, how about just setting up a layout like we do in the Sector Secrets Mastery, where we put the index in the upper left-hand corner or the sector, and then put the top weighted stocks in after that. That'll tell you why it's doing what it's doing. So let's say you wanted to look at, here, I'll give you an example. Let's say you wanted to look at QQQ, NASDAQ. You could put NQ or QQQ in the upper left-hand corner. And then the next 11 spots, you would put in each one of the stocks in the order of their weighting in that index. And that's how I look at specifically what stocks are moving that sector based on high concentration weighting, which is really what makes the world go around anymore. All right. Next up is, let's see here. What's the best between BITO and IBIT? So first thing I would do is just talk about what each is, right? BITO is basically, if SPY is basically your relationship back to ES futures, BITO would be loosely your relationship back to Bitcoin futures. All right. So first of all, when you're comparing any of these, I would look at liquidity. I'm not going to do it now, but what I would tell you to do, Panthers, pull up BITO, pull up whatever the other symbol is you want to compare it to. Look at the liquidity every day. If you want to trade options, look at the option chain for open interest. What kind of volume is trading? Is one in better sync with the underlying Bitcoin? Because that's really what we're trying to mimic, use a proxy as. So I would just go through the process of seeing which one has better alignment with the thing that you want it to move like. In this case, BIT would be Bitcoin futures. So compare it trend-wise, look at the liquidity. And then that's really the way I would look at what's best. Best is going to be the characteristics of that symbol, mainly liquidity and trend. I've read that Jeff Bezos has an open order to sell when Amazon reaches 200. It goes over, but always seems to come back down. What are my thoughts? I have no thoughts on that, frankly, Brian. I just don't. We've been above 200. You're saying he has an open order to sell now. Maybe he does, maybe he doesn't. My thinking is this. If you're concerned, let's just boil it down to something practical. If you're concerned that 200 is a resistance level, wait till it becomes support. That's one way to take something that, frankly, Brian, there's no way we could possibly know, right? And typically, your prime brokers are not going to use a number; they're going to use a volume-weighted average price. So that's probably already incorrect. Yeah, they're not going to have a fixed number. Usually, they could, but if they're trying to get a good fill for their client, and I would think Jeff Bezos is a pretty good client, they're going to use different metrics as far as how they're going to enter the trade. He might have given them a limit, right? But it doesn't mean that's where it's going to be executed. Okay, the second part of that is, if we're concerned that 200 is resistance, charting 101 would tell us let resistance become support. Let the ceiling become the floor, like a multi-level building. Someone's ceiling is someone else's floor. So wait till maybe the 200 becomes a floor. That'd be one way to do that. Look if there's volume at that level when that happens. Is there a volume ledge? That'd be another thing to do. Or like with me, I don't care. I'm long Amazon. So if I'm concerned that 200 is going to be an impediment, an obstacle to further upside, I just want to make sure I pay myself at some point before that happens. I also want to make sure if I'm getting into something like that, to your point, where there's a concern that there might be resistance ahead, I want to make sure that when I get in, I'm getting in below, my trigger is below that level. So case in point, our triggers yesterday, the trigger that we used to get in was 197.15, something like that. So if we get stuck at 200, and I've got a 195 call, so I've got a slightly in the money call, we're still going to be able to scale out with some profit and then move to break even. So if 200 becomes a problem, we've accounted for that. But it's really not in any way part of the trade for me. But, not anytime we have a major psychological level, 100, 200, 300, it's probably a good idea anyway, right? I think that's a good idea to know that there could be selling pressure waiting at a psychological level. All right, gang. And just like that, we are out of time. Thank you as always for being here for Charts and Coffee. The show's been running for about 3 years now. And I thank you for tuning in each and every weekday. All right, gang. Have a great weekend. Thanks as always. Be good to each other. And I'll talk with you soon.